This
Good morning.
conference will now be recorded.
Good morning. This is Fadi Hemzi. It's 9:09 a.m. on December 16th. It's a Wednesday, 2020. Some calmness is coming back to the markets. We're going to take a look at all things markets. And here we go. First, let's deal with the calendar, as always we do. And as you know, we have a two-day Fed meeting. And it culminates in the closing of the meeting this afternoon at 2, an announcement, a communique. And then at 2:30, we'll have the Fed chair, the Honorable Jay Powell, give us a presser. This will go from about 2:30 to 3:15. Again, I urge you to look at the trade at that time as each question. So if you miss a trade, if you continued your existing trade to the next question, just cover that and step out, let that question go, wait for the next question, okay? Or step back, use one question as a buffer in what you were doing because they're not related. Past 3:15, or at least not time, but when he walks away from the podium, then you have one trade going, and that should be a good one, okay? So keep track of that. Retail sales was on early TV this morning. Let's see how it came in. I missed that. I was channel surfing with Admiral Tico, just hanging out with me in the bedroom. We were watching the TV together there. Not his favorite because it's a small TV. The 52-inch doesn't do well for him. He's 9 pounds, right? He prefers his 85-inch. So, oh wow, Also, the 52-inch is much older. So, anyhow, that's the separate problem. Dealing with blondes, yeah, it's a different issue. Again, reset your mindset there. All right, the numbers came in this way. Hold on. 0.3 revised down 0.1. Oh, Murray. Consensus 0.3 came negative 1.1. Okay. Wow. Yeah. Well, I ever expected that should be a bad number. I read that as good. That should have been priced in. A, B, that's just it puts pressure on the stimulus money, and the baby, they're ready to spend money, yours and mine. They're good at spending some other people's money. Yeah, many blondes in Congress. Yeah, by that definition. X vehicles, 2 quarter point negative 1.1. Wow. X vehicles and gas, 0.8. Jeez. Oh my God, this is horrible. This is a horrible retail sales. Well, again, it was supposed to be priced in. Going back, well, let's see what we got. What else we got here, Jack? PMI coming out at 945. We want to take a look at that as composite flash. Maybe we'll look at housing market. Not too thrilled about that. Big thing is FOMC. But of course, this is going to FOMC input now as they speak, as they're having their tea, that marvelous conference room in what we call the Temple. That's a Fed building in Washington. Housing starts we're going to look at and jobless claims. What's the consensus here? Let me see what the estimate was because last week it dipped down to 806. Okay. All right. Yeah, we went up 137 last week, correct? Okay. Coming back. Housing. Let's see what housing they're asking. Remember, these are red dots. The red ones you want to look at. It's sometimes too late to look at it after the number or about the numbers to come out. You got to have a sense of it a day or two before, an hour or two before, not right as the number comes. At least that works for me. I kind of focus on a number. 1.53. This is saying to be steady. Okay. All right. And then what else do we have? I don't care about balance sheet. This balance sheet is in trouble anyway. Come on. We've never had balance sheet this big. Yeah. Wow. Viva Trump. We built the biggest Fed balance sheet. He doesn't know what that means, so he would say that. Yeah. Anyhow, current account. Jesus. That's insane. Current account. Holy macro. Wow. Jesus. Wow. Okay, LEIs. They're both the dark, but I just want to take a look. Hold on. This is not bad, though. This is not bad. That's what market is slowly edging higher. Coming up, a wall of worry. All right. Moving forward quickly. Timer. What time is it? 9:14. It was a huge comeback yesterday, especially closing above the open and almost near the high. We should be taking that out. What are we doing on overnight? Yeah, we're up 3. Yeah, we should take that out. I think it's just a matter of time for us to take the high out. I'm expecting this level at least 37.30, and probably we run a gas limit as a 2.5 sigma. The difference between these two right now, as it stands now. So 75.30, that's 45, right? Take 20. So I said 37.50. I think 37.50 would be my number. What we're going to get gas for this leg. That's what we're going to put that PFT trade out. Okay. We had a huge spike in the down to up volume. That was 11:30. Yeah, and that's this one. Yeah, that's probably what flushed it. We'll see, but we had new highs in between. Confusing. We have we have a lot of non-correlated events happening. It's still, to my opinion, as a personal opinion, in my own humble opinion, it's a very schizo market. Still, this is a problem. Last night I saw. Yeah, this is a problem. We dropped this huge. We only come up this little, and look what Russell is doing. These two act as LEIs for me, leading economic indicators, or leading market indicators. Let's say LMIs. And we're not going to go up without transportation for S&Ps. We're not going to go up for NASDAQ without Russell. And Russell had been running behind, lagging for a couple of years. The shape has been fine. The push has been right. The pulse has been right. The direction has been right, but not in absolute values in terms of new all-time highs. As this line changes, that's all-time high. That's what's a stair step. Every time it goes up, we're going to change. So it's just a simple function that takes a time series and looks for new highs. Okay, and we're hedging up here to 24.5. This is a high there too. This is 33. I don't think I've seen 33 before. That's yeah. Hold on. 1 second. Okay. So 1 second here. I have an issue here. Okay. Yeah, there we go. Okay. Now, yeah, you see what happened there. We did not. This was a failure though, right before February. Remember that? Yeah. Oh, I was pounding the table last January, saying, watching these two. So now we have this going up to new high. That's Russell, but not Tran. Okay. All right. Well, we have to observe. Now, here's the sell. We talked about it yesterday. There was a sell on a mechanical system daily model, smaller brethren of its weekly model. Okay. But they're not exactly the same. They're slightly different. Okay. But we are buy and a sell. We have not changed these models in 10 years. No need to. You start changing these, you get creating curve fit. You really need time. People who change these don't have a solution and they're in a rush. They just dig a bigger grave. Okay? This business is about longevity. You have to survive. Whatever it takes. It's a cum learning. If you cum learn in the right spot, with the right indicators, with the right leadership and transparency, you build for yourself a mental capacity to tackle new markets. If not, you're curve fitting and you're a programmer. That's not trading. Please, I've been there, done that myself. I'm admitting to that. Mea culpa. That's why mea culpa. Don't do that. That's why I went 3 years with no income. I mean, not from trading. Yeah, no income for trading, zero. Actually, losses. Yeah, and data feed and cost and telephone, it was just horrendous. My phone alone was $5,000 a year because $400 a month was almost my bill. Just to keep up with TradeStation. Back then, you didn't have these features we have now in cell phones and all that. So yeah, you can drain you away. Don't do that. That's why I'm convinced I gotta write my own indicators. I can't be using somebody else's. I'm a company based, a free base, a free set of indicators given away with the platform. No go, absolute no go. Okay, now, yeah, hold on 1 second. All right. Okay. We edged up a little bit today. I wonder why. Okay. But this was yesterday. That was nice. Remember, VIX trades in the morning early. Okay. Keep track of these. Not a shock, so you can't do any counting. This is too small. This is a shock wave. This is not. So, yeah, noise. Move on. SQ. We had edged up. We came down. Hold on. This doesn't look updated. Let me see. Yeah. So that's 15. This was yesterday. Correct. Okay. So we edged down. Okay, makes sense. All right, good. Forget trend. This is what we want to talk about, 65.31. This was a very decent comeback from the middle of the no man's land, but tilted toward the buy area, went to a sell area. So strength came back. This was weakness. But this was a huge move in one day. All right. We have missed the rendezvous point of these three. So we may have to see what we have extra. Or here's what the scary part. Could be a rendezvous on the downside. But we did not. This was an excellent rendezvous there. Okay. We're not doing that right now. So this was a huge drop there. All right. So by the way, the German Mark Rose, who was I don't know what his position is. I know tonight because it publishes every 2 days. If he's short, then and we go up here, I think I get that. I've got 1% back and then some. Yeah, he's 1% ahead of me as of Friday, last Friday. But this move there was 1.2. If he stays short, he's 1.2 negative and 1.2 positive. So that's a 2.5%. I've regained that. Yeah, we'll see. Let's see how this thing works. Remember though, they drop a day the week before, right? It's a moving 12 months. It's the stagger of data. So it's got it's the last 2 weeks of last December up to now, because we have 2 weeks of December left now. So that's how it works. So it's not exactly that clear, but yeah, this has happened to me before. I went to last week of a year as number one, and somebody took over me. But that guy got flamed out. He was doing day trading at 8 in the morning updates, and that's against all the rules they have. Nobody else was doing that, so he was doing in and out quite a bit, and I wrote back and said, "Wait a second, that's not market timing. He wants to trade S&P. He's going to do that. Open a service, do that. Open a website. That's not market timing. You can't change your position 5 times a week." So, and then once he tried to go there, he flamed out. He just couldn't hold it. He couldn't do it. So it's tough to do both. Most people do one, not the other. Either futures or market timing. I don't know. I'm not good at either one. I'm still learning. But I'd say I never wanted a simple challenge. My mom wouldn't grade me on that. Doesn't count. Simple challenge. You have to have a decent challenge. So that's the craziness of my parents, and thus my upbringing. They did nothing wrong. Don't get me wrong, but very different. Okay. Okay. This is what we always look at: percentage of stocks over 200-day moving average. Very, very high reading there. It met the moving average. Now it touched it. I think this happened on Monday, and then we came back up yesterday. Again, separation is high. Always look at these where the data is and the moving average. That separation opens up. That's why I like diffs. I look at diffs. That's what it is. You can imagine if you're plotting this dip. This is showing a strength up, but this can only go to 100 anyway. So it's at 92. I don't think I've seen it past 95. Even if it's 95, I would humbly submit that probably haven't seen it after 90. This is probably your first time seeing it in this range. And obviously that was like 93 up there. So interesting times we live in. Okay. The bottom line is could be counter into productive. That is, we've gone too far. Everything is pushed. But then again, if it is a melt up, that's the only way this is going to happen mathematically anyway. So you cannot just look at it mathematically. You have to understand what's happening, the underlying pressure for the market to go up. Baton is passed. That's done deal. Okay. The issue is Georgia. COVID second vaccine probably approved tomorrow or Friday. Tomorrow by FDA and then CDC on Friday or something that whoever does it first, I forget. But and then stimulus is coming in, and you got year-end seasonality. So all other things being equal, ceteris paribus, you got 4 different non-correlated. Data and economic data is weak. pushing the stimulus to be bigger than before, and nobody smells like the Democrats. Come on, let's admit that. So this could take a boost from free cash and go up, and up. And the way you go that is this kind of run. Read what's his name? Bill O'Neill. This is how you go up. New high, new high, new high. You're buying the edge. You're buying the edge. It's not easy. It takes a lot of guts, but that's how it's done. Okay. Quickly, futures. Yeah, next is futures. Okay. Come on. Good. Overnight. This is what we're at. 425 and 20. Issues point. I usually look at the percentages. Yeah, they're right in line. That's fine. Okay. It has had a little bit lower readings. It had a much higher reading earlier, but you see some activity. This is probably 820. Oh, this was the number. This was the number. Yeah. This was the retail sales. Yeah. All right. So we had run up as high as another 10 handles, about 14 up here. Yeah. Okay. All right. And then archives. This is what we have done. This was posted last night for you guys. Charts are caught up there on the website there, and here's your Excel Plus, and look what happened. Center line. Okay, so left translation staying below the MBS and the center line, then struggling, getting there, little sausage operation, and then breaking out, and now it's trying to retest the lows. So now the bias is upside. Would I buy up here? No. Wait for it to drift down a little bit. Okay. Any questions for me? Thank you for attending. Let me get this thing posted. Any questions? Okay. All right. Ending the meeting.